Good evening. Please come to AS10. This question we have completed. Problem on major inspection cost. One more question, please write down. Write down one more question. Write down one more question in the notebook. Write down one more question in the notebook. What happens? What happens if the cost of the what happens if the cost of the previous part what happens if the cost of the previous part or inspection was previous part or inspection was or was not identified in the transaction in which the item was acquired or constructed in which the item was acquired or constructed. Okay, this is the machine and this is suppose a part. This is the part of that machine which has to be replaced by a new part So understand the question. In the previous lecture you have seen, if the old part is replaced by a new part, what you are supposed to do? You have to de-recognize the old part and you have to recognize the new part. This is what we have learned. De-recognize the old part at its carrying amount. De-recognize the old part at its carrying amount. But then the question is, how will you calculate the carrying amount? If this old part was identified, if the old part was identified and its cost was identified, if the old part was identified, suppose I have identified the tires of the car and I have identified the cost of the tire of the car, then I can easily calculate the carrying amount of that part which is replaced. But if that old part was not identified or its cost was not identified, then it will be difficult for us to calculate the carrying amount at a later stage. If after 5 years I ask you, find out the cost of the tire of the car which you are going to replace. Oh, the carrying amount of the tire of the car which is going to be replaced will become a difficult calculation. So your standard has given you the guidance. Listen to me carefully. Write down. Company is saying that it is very difficult to find out the carrying amount of the replaced part. Company is saying it is very difficult. So standard says nothing doing. Standard says nothing doing. Okay. This paragraph is printed in your book also. In case if you are a lazy fellow and don't want to write, then this is in paragraph 9. Paragraph 9, last part, last subpara. This is written, you can just underline there. If the part which is replaced, if it can be identified, well and good, derecognition of the carrying amount occurs. Even if it is not identified, we have to derecognize the carrying amount of the part which has been replaced. How do you identify now? That is the question. So what will I do? Add one more question. The standard says even if that part was not previously identified, it has to be replaced, which has to be replaced. You will remove the carrying amount of that part and capitalize the cost of new part. Next question, write down. Please write down the question. All of you are requested to write down this question. This question is in the institute study material also. The previous question was also in the institute study material. So I will request you to write it down. What will be your answer? What will be your answer in the above question? What will be your answer in the above question? If it is not practicable, if it is not practicable for an enterprise, if it is not practicable for an enterprise, if it is not practicable for an enterprise to determine the carrying amount, to determine the carrying amount of the replaced part, or inspection, if it is not practicable for an enterprise to determine the carrying amount of the replaced part or inspection. So that is a very interesting question, and I am going to take a numerical question on that. I will explain it one more time. This is, suppose, a machine. This is a part of this machine which needs to be replaced by a new part, because machine may have a longer life, that part may have a shorter life. A simple example would be a car. Car has a longer life, the tire may have a shorter life. So what I have to do, the standard says de-recognize the carrying amount of the old part. De-recognize the carrying amount of the old part and capitalize the cost of new part. This is what you have to know. But the question is, how do I calculate the carrying amount of the old part if it is not practicable for an enterprise to determine the carrying amount of the replaced part? After suppose 6 years, we are replacing this part and we have not calculated when we had purchased it 6 years ago, what was the cost? Because I purchased the car, I was driving, okay, sorry, like this, I was driving the car, this is scooter. So I was driving the car. After 6 years, I realized I have to replace the tires. But I don't know what is the cost of the tire that was paid for at that time. How do I calculate? How do I calculate the carrying amount of the part which is sold, or sorry, replaced? Please give me your suggestion. We are standing today after 6 years from the date of purchase of the car. I replace the tire. My standard is saying you de-recognize, remove the carrying amount of the tire cost, tire carrying amount, and add the cost of the new tire in your car value. How do I get it? Any potential suggestion? Should we estimate? The question says it is not practicable for an enterprise to determine. So I can't use guesswork also. How much this tire would have cost us 6 years ago? That is a guesswork. And the standard says guesswork is also not practicable. So what I will do? I will do reverse working. Today I know, today I know what is the cost of replaced part. Today I know what is the cost of replaced part. Let us say it is 1 lakh rupees. I have to find out what was the cost 6 years ago. I have to find out what was the cost 6 years ago. So the standard says take this as a basis and try to estimate the cost 6 years ago. So I will calculate present value. Oh my god. The formula for present value will be 1 lakh divided by 1 plus. Tell me some discount rate. Can I take discount rate 10% with your permission? Yes. So 1 lakh will be, you will do reverse working and you will find out what was the present value 6 years ago. So can you take your calculator and calculate the present value? Sir, how do I do it? Take your calculator gifted by your parents, type 1 lakh, divide by 1.10 and press equal to 6 time. So I am getting, anybody, first from your side, how much you are getting? Anybody, present value of 1 lakh, 10% discount rate, 6 year. Anybody who wants to contribute? 56447. 56447. That means if I would have purchased this replaced part 6 years ago, then I would have paid 56447 rupees for that. Is it right? So I got this part. Now what you have to do, after you have calculated this value, then depreciate it. Depreciate it for 6 year. Depreciate it for 6 year and that will give you the carrying amount. So Sakshi is saying 56,447.3. You are right. Sanket Jain is saying 56,447. You are also right. So what I will do, it will involve two steps to find out the carrying amount of the replaced part. Step number 1, find out the present value using the today's price and then depreciate it for the number of years completed. Then depreciate it for the number of years completed and that will give me the carrying amount of the replaced part today. Okay. So see, the answer is printed in your book. So don't write the answer, just underline in your book. There is paragraph 9 in your book, and in that paragraph number 9, last sub para, last 3 lines, it is written. It is written, it may use the cost of the replacement or estimated cost of a future similar inspection as an indication of what the cost of replaced part or existing inspection component was when the item was acquired or constructed. You will find this is written in last 3 lines of your paragraph 9 in the notes provided to you. Is it right? Now you will see the application of this paragraph. So I have designed a question for you, and this question is so important that you must write it down. This question you will not find in your institute study material or RTP. This is from reference book. Write down. I want you to learn advanced thing so that you are totally exam ready. Right. Little lengthy question, but can't help it. It is an 8 mark question. 8 potential mark question you are writing in your notebook. One question of 8 mark can change your destiny. XYZ, XYZ has acquired, XYZ has acquired a heavy road transporter, a heavy road transporter at a cost of at a cost of rupees 1 lakh, at a cost of rupees 1 lakh, with no breakdown of the component parts, with no breakdown of the component parts. So they have purchased a heavy road transporter. The total cost is 1 lakh, and this 1 lakh there is no bifurcation. This road transporter may have many parts, but right now they don't know the bifurcation of each part. Next line, estimated useful life is 10 year. Estimated useful life is 10 year. Estimated useful life is 10 year. Then write down at the end of the 6th year, at the end of the 6th year, the powertrain, at the end of the 6th year, the powertrain. What is powertrain? It is one of its component. Powertrain is the name of the component. The powertrain, one of its component, requires replacement. Requires replacement. One of its component require replacement, as further maintenance is uneconomical. As further maintenance is uneconomical due to off-road time required. Further maintenance is uneconomical. Okay, you can just stop here. Further maintenance is uneconomical. That is enough. This you need not write. Second line, write down the remainder of the vehicle. The remainder of the vehicle is perfectly roadworthy. The remainder of the vehicle is perfectly roadworthy. The remainder of the vehicle is perfectly roadworthy and is expected to last for the next 4 years. And is expected to last for the next 4 years. So the vehicle will continue for 10 years, but one part needs to be replaced after 6 years. Okay. The cost of the new powertrain. The cost of the new powertrain. New powertrain means the new part. The replaced part, the new part, is rupees 45,000. Is rupees 45,000. Can the cost of the new powertrain be recognized as an asset? Can the cost of the new powertrain be recognized as an asset? The answer is yes. The standard says the new part will be capitalized, and if so, what treatment should be used? If so, what treatment should be used? So you have to answer that old part will be de-recognized, new part will be recognized. But then you have to do the calculation of old parts carrying amount. Assume 5% discount rate. Assume 5% discount rate and straight line method of depreciation. Assume 5% discount rate and straight line method of depreciation. I hope all of you have noted the question. Just note down this question. This you will not find in your book. So I am going to now explain. Suppose this company has purchased this road transporter. Okay, this company has purchased this road transporter, and in this road transporter there is a component called power train. Power train. This needs to be replaced after 6 years. This power train needs to be replaced after 6 years. So what the student has to do? The student has to reduce the carrying amount of old part, and you have to add the cost of new part. Add the cost of new part. The cost of new part is 45. But what is the carrying amount of the old part? That we have to calculate. So how do I calculate the carrying amount of old part? Today the replaced part, today the part which is being replaced today, it is costing 45,000. How much it would have cost 6 years ago? So for that I will have to take 45,000 divide by 1.05 to the power 6, because the discount rate is 5%, and the time is 6 year. So can any of you, the genius students of AS Foundation, will you reply what do you think would have been the cost of this replaced part or that power train 6 years ago? So take your calculator and try. Take your calculator and try. Take your calculator and try. Anybody wants to reply? 33,580. Anybody else? One more answer, 33,580. Very good. Some students are really working hard. One more answer, 33,580. Very good. So let me also take the help of my calculator and check. So please write down the answer. So I am going to dictate the answer and explain. Thanga Lakshmi Surya 33,580. Gaurana 33,580. Rohit Kumar 33,580. So please write the answer. Please write the answer. The original invoice for the transporter, Adit is right. The original invoice for the transporter, this is an exam question for 8 marks. Must do it. Write down there on your notebook. Must do it before you go to exam. The original invoice for the transporter did not specify the cost of the power train. Did not specify the cost of the power train. However, its cost of the replacement, is rupees 45,000, which can be used, is rupees 45,000, which can be used as an indication of its likely cost, 6 years previously. As an indication of its likely cost 6 years previously. So now write down step number 1. Step number 1 is approximate cost of power train 6 years ago. Approximate cost of power train 6 years ago is equal to 45,000 divided by 1.05 to the power 6. If this power train was purchased 6 years ago, what would have been the price? This is how the standard gives you the guidance. So as you rightly suggested, 33,580. So 33,580 would have been the cost of this power train. 6 years are over. 6 years are over and the originally estimated useful life was 10 years. So can you tell me now, can you tell me what will be carrying amount after 6 years? What will be the carrying amount of this power train after 6 years? Please try. Unless you try, you will not understand. What will be the carrying amount of this power train after 6 years? So you will have to depreciate it for 6 years. Method of depreciation is straight line. Original useful life was 10 years, which means they are depreciating it over 10-year period. 6 years are over. So you will divide by 10 and multiply by 6. That will give you total depreciation they have already charged. The balancing figure will be the carrying amount of this power train. Is it right? So write down current carrying amount of the power train. Current carrying amount of the power train. Power train is that component which is replaced. Name of the component which is replaced. Some students had given me the answer, I will check. So the answer will be original cost 33,580 minus accumulated depreciation for 6 years. Minus accumulated depreciation for 6 years. So the answer will be 33,580 minus 33,580 minus in bracket 33,580 divided by 10 into 6. Divide by 10 into 6. So following students have given the correct answer. Sanket, Saurabh, Tanya, Ranjit, Pavan, Shubham, Lakshmi. Good. That means some students are really working hard. Now write down step 3. Carrying amount of the road transporter. The main asset is called road transporter. Road transporter was purchased for 1 lakh rupees. Its life is 10 years. 6 years are over. So what is the carrying amount of the entire asset? What is the carrying amount after 6 years of the entire road transporter? The answer will be, like you have computed earlier, original cost minus accumulated depreciation. Original cost of the transporter is 1 lakh minus in bracket accumulated depreciation 1 lakh divided by 10 into 6. 1 lakh divided by 10 into 6. So 40,000. Now understand, today, that is after 6 years, 40,000 is the value of this entire transporter and it contains a small power train part which is 13432. 13432 is a part of this 40,000. So this I will remove and a new part whose cost is 45,000, I will add. So what is the accounting treatment? This will be removed. This will be removed. 13,432 and 45,000 will be added. So write down next line. Step number 4. The cost of the new powertrain. The cost of the new powertrain is rupees 45,000. This is given. No calculation required. So what will go out? 13,433 will go out. And what will come in? 45,000 will come in. Is it right? So this is the answer of this question. And just write down below, if they ask you what will be the revised carrying amount of the road transporter, please write down revised carrying amount of the road transporter. Revised carrying amount of the road transporter, right hand side rupees, right hand side rupees. Carrying amount of the road transporter, carrying amount of the road transporter at the end of the 6th year, at the end of the 6th year, carrying amount of the road transporter at the end of the 6th year, in bracket step 3, was 40,000. Do you remember 40,000? Point B less current carrying amount of the old power train, current carrying amount of the old power train, step 2, 13,432 in bracket, 13,432 in bracket. And point number C, what you do? Add cost of new power train, add cost of new power train, given 45,000, 45,000. Point D, revised carrying amount, revised carrying amount of the road transporter A minus B and plus C, A minus B plus C, A minus B plus C, 71568, 71568. Is it right? 71568. So this is the answer of this question. And what two journal entries they will pass? First journal entry will be P&L account debit 13,432 to PPE 13,432, and second entry they will pass PPE account debit 45,000 to bank account 45,000. This way, this will get reduced and this will get added. This is how the companies are going to record the replacement of an asset, the replacement of the part of an asset, the replacement of the part of an asset. So this is something which you have not studied earlier, either in your 11th, 12th foundation, BCom, MCom, PhD. This is new. How to account for replaced part in PPE. With example, I have explained. Any query on this? I am dictating you some important questions like this one. Now come back to your notes. Next paragraph number 10. Measurement at recognition. Measurement at recognition. So when you are recording PPE for the first time, I have just now purchased this laptop. Example, suppose this is laptop, just now purchased. At what amount I will record? I will record it at cost. I will record it at cost. Now one student is asking how will depreciation be calculated in the next year? This will be divided by 4 because 4 years are remaining. Okay, Saurabh Chauhan, I hope you have asked seriously, or were you testing me? 4 years are remaining. You have a revised cost, divide by 4 years. Okay, so back to business. Measurement at recognition. At what amount the PP will be initially recorded? PPE will be initially recorded at cost. Okay. What is the meaning of cost? Cost means the cash. Now cash means bank transaction also, NEFT also, phone pay also, Google Pay also, and what else? UPI also, and what else, etc. All this is considered as cash payment, immediate payment. Pay the amount, get the asset. Cost is the amount paid. Cost is the amount of cash paid or cash equivalent paid. If not cash, cash equivalent also is okay. Or the fair value of other consideration given. Or the fair value of other consideration given. This will be discussed separately. This is called exchange transaction. Exchange transaction means you give one asset, this is Mr. A, this is Mr. B. Mr. A tells Mr. B, you take my building and you give me your Mercedes car. So this is how this car will be valued. The car will be valued at the fair value of the other consideration given. So fair value of the building given will become the cost of the car. Okay. Or for example, a student comes to me, his name is A, and he says, Sir, I want your laptop. I said, okay, you can take it. But then how you are going to pay? He says, I will work in your office for 6 months. Work for 6 months and I will give him my laptop. So this is again an exchange transaction. We will calculate the fair value of the work for 6 months. Fair value of the work for 6 months will become the cost of the laptop. Is it right? So this we will discuss in detail with lot of interesting example later. This is called exchange transaction. You give something in exchange, you get a PPE in return. How will you value it? Cost is the amount paid to acquire an asset at the time of acquisition or construction. This is the definition of cost. Once again, cash paid, cash equivalent paid, and fair value of any other consideration paid to acquire or construct an asset, that is called cost of an asset. So now we'll go into detail. That is what they teach in 11th standard, but we are not 11th standard. We are intermediate, the great intermediate candidate. Okay. Your parents must also be telling the other people, see, my son is doing inter CA. So cost will include the purchase price, then including import duty and non-refundable purchase taxes after deducting trade discount and rebate. What do you mean by non-refundable purchase tax? Like suppose you go to a shop today, you buy some asset. So in the invoice it is written price laptop 1 lakh, SGST, 9,000, CGST 9,000, total 1,18,000. Now the question before you is whether you will capitalize it at 1 lakh or whether you will capitalize it at 1,18,000. Whether you will capitalize it at 1 lakh or 1,18,000. Then you have to see whether this GST paid is refundable or not. Is input tax credit available or not? If the answer is it is not available, input tax credit is not available, then you will capitalize it for 1,18,000. But if the input tax credit is available, then you will capitalize it for 1 lakh. So in the question they will give you something like GST, SEN VAT, you will check whether input credit is available or not. If input credit is available, then do not consider tax paid on purchase. If input credit is not available, then consider tax paid on purchase. If any trade discount or rebate is received, deduct it. Underline one important sentence: any cost directly attributable to bringing the asset to its location and condition necessary for it to be capable of operating in the manner intended by the management. Very good. What it says, and they will ask you this question again and again: some cost is incurred. Whether that cost will be added to the cost of PP or not. So you have to apply this test. Is it directly attributable to bring the asset to the location and the condition that was necessary for it to be capable of operating in the manner intended by the management? Very important test for capitalization of certain costs. Like for example, freight inward, then unloading, loading, site preparation, inspection cost, okay, professional fees, all these are incurred to bring the asset to the location and condition as desired by the management so that it can be operated by the management the way they want to operate. So that I am going to add. Here we have to apply our judgment and see whether these costs are directly attributable to bring the PPE to its desired location and condition. Is it right now? Next point, which is very important, on that we will take a small question also, not printed in your book, and then a long question later. Small question, big question on this. What is that? Initial estimate of the cost of dismantling. This is based on estimate. Cost of dismantling, removing the item and restoring the site on which it is located, which is technically called decommissioning, restoration and similar liabilities. Now see this diagram or these photos on the right side. You must be wondering for last 2 minutes, what is the purpose of this picture? You will find there is a mine. Government has given you the license to take out the iron ore or coal from this mine. But then there is a condition that after your mining activity is over, you are going to dismantle, remove whatever you have constructed there. You have to dismantle, you have to remove and restore the site. You have to restore it, bring it back to the same condition. Bring it back to the same condition in which it was given to you. Then you have an obligation to dismantle. You have an obligation to remove those items. You have an obligation to restore the site. Or for example, this is oil rig. Government gave you the license to do oil exploration in the sea. So you will do lot of construction of those oil rig structure, but once that activity is over, you have to remove, dismantle, restore the site. That is called decommissioning, restoration and similar liabilities. Because it is directly related to this activity, even the cost of decommissioning, because you have taken PPE and the decommissioning is directly related to PPE, it's a directly attributable to bringing that PPE. If you don't do it, government will not give you the license. The cost of decommissioning will be added to PPE. So you have to estimate how much will it cost to decommission, to restore the site. Because this will happen after few years, you need to calculate the present value and add it to the cost of the PPE and add it to the cost of the PPE. Write down one question not printed in any of the ICAI material, taken from reference book. Okay, just to give you an idea how that decommissioning expenditure is calculated. Please write down. Please write down this question. All of you, please write down the question. ASF Mining. Oh, wonderful. Name of this company is ASF Mining Limited. Has projected site restoration expenses. Has projected site restoration expenses of rupees. Has projected site restoration expenses of rupees 1 crore 57 lakh 4,710 after 40 years. So let us try. ASF Mining Limited has projected restoration expense of 1 crore something after 40 years. The rate of discount is 11%. Past journal entry at initial recognition. You have to incur 1 crore 57 lakh 4,710 after 40 years. You have to restore the site. Government has given the permission subject to you will restore the site. That is your decommissioning obligation. The standard says if you have a decommissioning obligation, then you are also going to add the present value of the decommissioning obligation to the cost of the PPE, and this will take 40 years. The question is, what is the present value? So how do you calculate the present value? Take this number, divide by discount rate 1.11 to the power 40. Try yourself now. Such questions you will not find in study material, but the concept needs to be understood by taking present value, otherwise you will not understand. So type on calculator 15704,710 divide by 1.11 and you press equal to 40 times. You have to press equal to 40 times, 40. Expenditure will be incurred after 40 years, but I have to do the accounting today, so I will take the present value. So please reply. The answer is present value of estimated restoration expense. Present value of estimated restoration expense. This is your calculation. So I have started getting the answer. This is approximately 241,608. If you do this calculation, or in case if the student wants to use the PV factor of 1 rupee, then also it's okay. Your answer should be 241,608. 241,608. Sonam, Pavan, Sakshi, Shubham, Sanket. You are right. Other student must also try. Other student must also try. Tanya is right. Sonam is right. Question is, what about the journal entry? This expenditure you will pay after 40 years. This is the present value. I will pass an entry like this. So write down journal entry in the first year. Chauhan is right. Journal entry in the first year. You are going to add it to the cost of PPE. PPE account debit. PPE account debit 241,608. To provision for decommissioning expense. To provision for decommissioning expense. 241,608. Being recognition of decommissioning liability. Being recognition of decommissioning liability. Being recognition of decommissioning liability. Just write a note and complete the answer. Every year we will provide finance cost every year we will provide finance cost at the rate of 5% on the opening balance of provision for on provision for decommissioning liability. On provision for decommissioning liability. Every year we will provide finance cost at the rate of 5% on the opening balance of provision for decommissioning liability. So you have created a provision here 241,608, but the amount payable is 1 crore something. So every year I will add 5%, 5%, 5%, so that at the end of the 40th year, the balance will become equal to 157,04710. 157,04710. This is the meaning of this line. You have calculated present value of this amount, so you have to make sure that after 40 years, the balance in that decommissioning liability account becomes this amount, and this will be paid at the end of 40 years. To reach this value, I need to keep adding 5% every year. That is called finance cost, and finance cost is charged to P&L account. Finance cost is charged to P&L account. Finance cost is charged to P&L account. Okay. So I hope this decommissioning entry you have understood, the calculation you have understood, the logic you have understood. It is a directly attributable cost. Paragraph number 11, examples of, these are example of directly attributable cost. First is cost of employee benefit arising directly from construction or acquisition of a PPE item. So if an employee is involved in construction or acquisition, his salary would be added to the cost of PPE. So if an employee has worked for 2 months in the construction of a building, his 2 months salary will be added to cost of building. Then cost of site preparation. To make that site ready, you will have to do lot of activities. Is it right? So you may have to do digging, remove stones, soil, level it, etc., etc. That is called site preparation. How to arrive at 5%? This is given in the question. Otherwise, this is your usually the cost of capital. So as a student of intermediate, you don't have to worry about how to arrive at 5%. That will be given to you. And then the student is asking how to calculate that finance cost. Oh, wonderful. In the first year, finance cost will be 5% of 241,608. In the first year, finance cost will be 241,608 into 5%. That is, I think, 12080.40. This you will add it to this number. Next year, take the total of this, again take 5%. Next year, take total of principal and all interest added. That means you will do compounding. Only if you do compounding at 5%, after 40 years, the balance will become 157,04710. So that is, you have to keep adding 5%. So don't worry about this. This is not the current requirement. Okay. 5% how to calculate, it is given to you. It is the cost of capital of the company. Second example, cost of site preparation. We are discussing what are the directly attributable cost incurred to bring the PPE to its present location and condition so that it can operate in the manner as intended by the management. Initial delivery, so freight charges, loading charges, unloading charges, installation charges, assembly cost. If the assets come in parts, you have to assemble. It may cost you something. It may come in a box. You have to unbox, assemble it. That may involve taking the help of some technician, engineer, carpenter. That is the cost. And then cost of testing whether the asset is functioning properly. That is called testing cost. If you have purchased an asset, you may test it to check whether it is functioning properly or not. Even this cost is added. But sometime in the process of testing, some sample or some item may be produced which will be sold. So that sale value will be deducted from cost of testing. So cost of testing is 10,000. Sale value of sample produced. Sale value of sample produced 2000 rupees. So the net amount to be added is 98,000. Now the student will ask me, what is this item? Suppose you have purchased a juice maker, a big juice maker, but you want to check whether this juice maker will really produce nice quality juice. So you did the testing. You took 10 oranges or 100 oranges and you took out the juice. The testing cost was 10,000 rupees for some reason, but the juice that was produced was sold also. You got 2,000. So net testing cost 8,000 will be added to the cost of the juice maker. Wow. Okay, I hope you are also drinking juice every day to keep healthy. So how many of you drink juice every day? Please answer my query. Then I will proceed further. I am also drinking the juice H2O. Nobody drinks juice in the classroom. Very good. You are saving money for your parents. Point number F. Professional fees will also be added. Suppose you are constructing a building, then architect's fees will be added. Consultant, you have hired a consultant to buy a machine. So consultant's fees will be added. Okay. Lawyer's fees will be added. If it is directly attributable to purchase the asset. If you are buying a building, lawyer's fees, consultant fees, Vastu Shastra fees will be added. Okay. Next is example of costs that are not the cost of an item of PPE. Not to be included. Cost of opening a new facility or business, such as inauguration cost. So you are opening a new office. You have become, suppose you have become a chartered accountant. This is your new office. You have invited Alia Bhatt to do the inauguration. Alia Bhatt took 50 lakh rupees from you. Will you add it to the cost of the office building? Say yes or no. Alia Bhatt was paid 50 lakh rupees to inaugurate the office. Will you add it to the cost of the building? The answer is no. Next is cost of introducing a new product or service, including advertisement or promotions. So these are advertisement cost. You incur a huge advertisement campaign to launch a product that will not be included in cost of the property. Then it says cost of conducting business in a new location or with a new class of customer. Suppose your factory was located here, A, location A. You have shifted your factory to location B. You have shifted your location to factory B. This cost of relocating will not be added. Okay. Any staff training cost will not be added. Training given to staff is not to be capitalized. Administration and general overhead not to be capitalized. Only one thing you keep in mind, if they are directly attributable, then capitalize. If they are directly attributable, then capitalize. Okay. Falling costs are not capitalized. So why I am telling you, because after some minutes I will give you some question and you have to check whether those cost needs to be capitalized or not. The cost incurred while a PP item is capable of operating in the manner intended but is yet to be actually brought into use, or when the item is operating at less than full capacity. Very important. This asset is available for use. Asset is available for use from 1/4/2022. Actual used. Actually used from 1st May 2022. You may have incurred some cost here. Some cost was incurred after the asset was available for use or when it was actually used. The answer is, what will happen to this cost? This cost will be charged to P&L account. Or even if you are using the asset, you are only using 10% capacity. Irrespective of that, any cost incurred after the asset is available for use will be charged to P&L account. Then next they are telling you initial operating losses. Oh, what is initial operating losses? We started a new factory. For first 6 months there was losses. Can these losses be capitalized? The answer is no. These losses will remain in P&L account. You will not adjust it against the cost of property, plant and equipment. This I have told you, cost of relocating or reorganizing the operations of the enterprise. These costs are not to be capitalized. Okay. So at the end of the chapter, after 4 or 5 pages, you will find there is a list of questions. So my dear student, please come to question number 1. Please turn about 7 or 8 pages and there is a question number 1. Do not read the answer. This is an intermediate student. What he wants? He wants to know, discuss the following as an element of cost of fixed asset. Fixed asset is now called PPE. So wherever fixed asset is written in the notes, you will convert into PPE. So please participate. You will respond. Okay. You have to simply say whether these expenses will be capitalized or do not capitalize. So these are the two possible answers for each of these questions. Good student will respond fast. General administration expense. General administration expense. Capitalize or do not capitalize. Capitalize or do not capitalize. So here the answer will be do not capitalize unless directly attributable. Unless directly attributable. Okay, unless directly attributable. One more chance. Wages payable for the erection of the machinery. Wages payable for the erection of the machinery, you will say capitalize because it is directly attributable. Ganesh is right. Ganesh ji, namaste. Conveyance expense paid for the purchase of plant. Answer. Conveyance expense paid for purchase of plant. Is it directly attributable? Yes. So you will say capitalize because it is directly attributable. Very good. Everybody, come on, respond fast. Point number D. Interest paid on loan taken to purchase the asset. Interest paid on loan taken to purchase the asset. So here we will have two answers. If it is a qualifying asset, as per AS 23, accounting standard, 16, as per AS 16, qualifying asset means an asset takes substantial period of time to get ready. An asset which takes substantial period of time to get ready. Yes, come on. If it is a qualifying asset, your answer will be yes, capitalize. And if it is not a qualifying asset, then do not capitalize. Then do not capitalize. Okay? So here we have two answers. Point number E, cost of design of a machinery. Cost of design of a machinery. Tell me the answer for E. Capitalize, directly attributable. Capitalize, very good. Directly attributable. Sanket, Ganesh, right? Interest payable on a hire purchase agreement. Same answer like D. Same as D. If it is a qualifying asset, yes. Not a qualifying asset, then the answer is no. Penalty payable. Penalty payable to a supplier. Penalty payable to a supplier for delayed payment. Capitalize or do not capitalize. Point number G. Do not capitalize. It is not directly attributable. You are paying penalty for delayed payment. It has nothing to do with bringing the asset to its present location and condition. Overheads of the company do not capitalize unless directly attributable. Do not capitalize unless directly attributable. Last one. Who will answer last one? Quickly. Non-technical staff salary during installation. Non-technical staff salary during the installation period. Non-technical means they are nothing to do with installation work. Suppose a machine has to be installed. I am the accountant of the company. I am a non-technical person. So the answer is do not capitalize. But if the employee is involved in the installation process, then capitalize. Gorana is right. Shubham is right. Sanket is right. Ganesh is right. Okay, enjoyed this question? So, how many of you enjoyed this question? First, tell me that. Then I will talk to you. Did you enjoy? Okay, please write one small question. I am going to dictate. Please write one small question. Entity A, entity A, which operates, entity A which operates a major chain of supermarkets, a major chain of supermarkets has acquired a new store location, has acquired a new store location, has acquired a new store location. The new location requires The new location significant renovation expenditure. Requires significant renovation expenditure. Management expects that management expects that renovation will last for 3 months. Renovation will last for 3 months, during which the supermarket will be closed. During which the supermarket will be closed. During which the supermarket will be closed. Management has prepared the budget. Management has prepared the budget for this period. Has prepared the budget for this period, including now there are two costs. Write down this cost. One, expenditure related to construction and remodeling cost. Expenditure related to construction and remodeling cost. And second, salary of staff who will be preparing the store before its opening and the related utilities cost and the related utilities cost. So the question is, what will be the treatment of such expenditure? The source of this question is study material. What will be the treatment of such expenditure? So I will give you four choices this time. Option number A, only one should be capitalized. Only first one should be capitalized. Option B, only second one, this is one, this is one, this is two, only second should be capitalized. C, both should be capitalized. And D, none of the two should be capitalized. So you have to tell me whether the answer is A or B or C or D. A, B or C or D. Okay, so tell me the answer. A. Adit is saying A. Ganesh is saying A. Saurav Chauhan is saying A. Sanket is saying A. Okay, keep trying. All other students will also answer. So everybody apply your mind whether I need to capitalize construction and remodeling cost or salary of staff who will be preparing the store, or both, or none? What is your answer? So the answer for this question is only first one will be capitalized because this is directly attributable, whereas the salary of the staff who is going to prepare the store is ready, now they are just doing decoration. Okay, they are putting welcome tag and other related utilities cost. So the answer is only one will be capitalized. These costs are not directly attributable. These are operating cost. These are operating cost to operate the business. Whereas this cost is cost incurred to bring the asset to its desired location and condition. Now, this kind of questions have been asked in the exam. So, I would urgently request you to write it fast. Okay, those who want to take the photo, you can take photo and write later. Otherwise, better if you write it now only. Management should capitalize. Management should capitalize. Tanya is right. Management should capitalize the cost of construction and remodeling the supermarket. Cost of capitalize the cost of construction and remodeling the supermarket and remodeling the supermarket and remodeling the supermarket because they are necessary because they are necessary to bring the store to the condition necessary necessary for it to be capable of operating in the manner intended by the management. However, the cost of salaries, however, the cost of salaries, utilities, and storage of goods are operating expenditure that would be incurred if supermarket was open. These costs are to be expensed. 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 So this is how you will present the answer. It is a 4-mark question. Oh my God, 4 marks. How many of you want 4 marks? Just 4 marks. Come to next discussion. Self-constructed asset like this office building. This is my office building, okay? I am constructing it. It has only 20 floors. How to find out the cost of self constructed? Means you have not directly purchased it from the market. When I buy a car, it is not a self constructed asset. When I buy a mobile phone or a laptop from the market, it is not self constructed asset. Come back to your notes. But companies can construct their office building, factory building. You can construct or say for example benches in the classroom we have done. Then what I will do, I will apply the same principle which I apply for purchased asset. All the principles we have learned will be applied with some additional features. I will not take into consideration any internal profit. Suppose there are two departments, Department A, Department B. Department A purchase goods for 100 rupees, transfers to B for 115 rupees. Department A makes a profit of 15 rupees. Now Department B use this material for construction purpose. Department B use this material for construction purpose. How much will you consider as cost? You will consider 100 rupees as cost. You will not consider 115 rupees because 15 rupees is internally generated profit. The two departments belong to same entity. You can't make profit from your own self. So if there is an internally generated profit, then that will not be included in the cost. So if A transfers to B at 115 rupees, and suppose that material was used for construction, the cost will be still 100 rupees in the balance sheet. Next point, which you already know, abnormal losses of material and labor are excluded. So any abnormal loss of material, abnormal labor cost will not be included. What about the borrowing cost? In case suppose loan is taken for construction of this building, then interest will be capitalized as per AS 16. So we have another chapter in our syllabus, AS 16 borrowing cost. There we are going to learn how much and how to capitalize the borrowing cost over the self constructed asset. So why, how, how much borrowing cost should be capitalized, this we are going to keep it pending for few days only, because AS 16 will also be covered as a part of this syllabus. Okay, we'll take a question on this a little later. Now treatment of, for example, one more thing is there. Are you there or have you gone into sleep mode? For example, now sometimes what happens, there is a construction of building going on. You see the diagram on the right side. Some construction of building is going on. So building construction started. You may have observed till the building is finally complete, sometime what they do, this space they let out for parking of cars. Oh my God, let out for parking of cars. This area they let out for parking of cars and they get some rent. Or sometime what they do, they allow some companies to put their advertisement hoardings on the side of the building and they get some rent for this advertisement hoarding. Now the question is, now the question is, what about this rental income either from car parking given or for advertisement board given? The standard says Such expenditure are income item and related to incidental operation. Such income and its related expenditure are incidental operation and will be recognized in the statement of profit and loss. So, income earned when the construction of the building is happening, when some area may be let out for parking, these are incidental operation, may not be main operation but incidental operation. So, net income or net expense will be charged to or credited to P&L account. This is not directly attributable. What about bearer plant? Suppose we are growing mango tree. Okay. Suppose we are going mango tree. This is mango tree. Assume. Right now I am writing in a hurry. Otherwise I am also an artist. This is mango tree. Mango tree, you started from a small plant and now it has become a tree. So this is also like a self-constructed asset, and this will also be treated in a similar manner. Cultivation activities are equated to construction activities. But good news, you don't have much discussion on bearer plant in this chapter. Now we will test you. You will not read the answer. There is a question number 13 at the end when all questions are given. All questions are printed towards the end. So, dear student, can you make some effort, turn the pages and reach question number 13, which is like this. On March 1, 2009, X Limited purchased rupees 5 lakh. All of you will participate in answering. This type of questions are asked for 4 marks. Either you get it full or you lose it full. Because I need the correct final total figure. Question I will read again for you. I hope you have reached the question. On March 1, 2009, X Limited purchased rupees 5 lakh worth of land for a factory site. Company demolished an old building on the property and sold the material for rupees 10,000. So there is a site preparation cost. What is the cost of demolition? 50,000. Whatever scrap you generated, you sold it for 10,000. So net site preparation cost will be 50 minus 10, 40,000. 40,000 will be also treated as the cost of PPE. Company incurred additional cost and realized salvage proceed during March 2009 as follows. So first of all, you have purchased a land for 5 lakh. Legal fees you have incurred 25,000. Title guarantee insurance. This is also direct cost, directly attributable cost. To get the title guarantee insurance, something should not be wrong. And then cost of demolition 50,000. But we have sold the scrap material for 10,000. So net demolition cost is 40,000. Institute is asking you compute the balance to be shown in the land account on 31st March 2009 balance sheet. My God, such a easy question. Only mistake the student can make whether to take this 10,000 or not. The answer is we will take it. We will capitalize the net demolition cost 40,000 only. So please tell me the answer of this question. 5 lakh plus 25,000 plus 10,000 plus 40,000 is equal to, one student is saying 5 lakh 75,000. Tanya 5 lakh 75,000, Pavan, Kalyan. So the answer is right. The student will prepare the answer neatly like this. I think the answer is given to you. So just concentrate on understanding. Cost of land 5 lakh, legal fees 25,000, title insurance 10,000, cost of demolition less salvage value 10,000, 40,000. The total of this will be 5 lakh 75,000. So this was like a small sample question. One more practice we will do. Please do not read the answer. Close your book. Look at the screen and answer. Close your book. Everybody, close your book. Otherwise, you will be tempted to look at the answer and quickly you will respond. Let us see who will respond first. The one who will give correct answer will get a prize. PQR Limited constructed a fixed asset and incurred the following expenses on its construction. Material 16 lakh full. Direct expense 3 lakh full. Direct labor, read a note. There is a note. It says 1 by 15th. 1 by 15 of the total labor time was chargeable to construction. Oh my God. Some student in a hurry will take 6 lakh. You have to take only that portion of the total wages which is related to construction activity. So anybody wants to answer 1 by 15 into 6 lakh, that comes to 40,000. So I will take 40,000 rupees, not the entire amount. Total office and administration expense, again read, 4% is specifically attributable to construction of PPE. So I will only take 4% of 9 lakh. 4% of 9 lakh, that I can also answer 36,000. And then they are saying depreciation on the asset used for the construction of fixed asset 15,000. One asset may be used. One asset may be used for the construction of another asset. Possible or not? Now suppose this is a machine, a construction machine, which you see on the construction site. This was used in the construction of this building. This machine was used in the construction of the building and you have incurred 15,000 rupees depreciation of this machine. But this depreciation will be added to the cost of building because the asset was used for the construction of building. Because the asset was used for the construction of the building. Because the asset was used for the construction of the building. Therefore, this 15,000 will also be added. If one fixed asset is used in construction of second fixed asset, the depreciation of the first fixed asset is a directly attributable expenditure and you will add it to the cost of the second fixed asset which is constructed. So hopefully that clarifies your doubt. So my final answer will be, take on your Chinese calculator. 16 lakh, 3 lakh, 40,000, 36,000 and 15,000. So the answer is, many students have already answered, 19,91,000. 19,91,000. So Ganesh, Pavan, Aditya, Sanket, you are right. This kind of question will be asked for 4 marks. What are the mistakes the student can make? Make a list of the mistake. First is, he may not do this calculation. So this is one accident prone area. Second, he may not include this. This is another accident prone area. If you make any mistake, your total will go wrong. And if your total goes wrong, the institute will give you a number starting with Z. Okay. Which number starts with Z? You can imagine. One more practice. This is also important. I am taking few questions. You will get an idea as to what kind of questions are being asked. Then today you will practice all question, homework. Practice all questions whatever you can. Do not sleep. You are a student. Sleeping is a luxury item for you. Sleeping is luxury. And student is not allowed luxury items. Student is not supposed to enjoy luxury, okay, till you are a student. So therefore today you will practice all question. If you really want to come in rank, or if you want to pass in the first attempt with very good marks, 80 plus or 90 plus, then follow the instruction. Otherwise choice is yours. Next IPL has lot of opportunity for you. Okay. Number of teams have also increased. Next World Cup also has a lot of opportunity. You can play from Afghanistan side also if you don't get opportunity in India. Question number 4 is square. 4 square, 16. So after that long motivational lecture, let us come to 16. Amna Limited. Oh, not Samna. Amna. Amna Limited contracted with a supplier to purchase a specific machine to be installed in department A in 2 months' time. Underline 2 months. This installation of this machine will take 2 months. Underline 2 months. Special foundation were required for the plant, which were to be prepared within this supply lead time. The cost of this site preparation and laying foundation is 47 to 90. This I will consider. These activities were supervised by a technician during the entire period, who is employed for this purpose for 15,000 per month. The technician services are given by Department A to Department B, which billed the services at 16,500 per month after adding 10% margin. Oh, this is another accident prone area. I will write for you. Accident prone. Accident prone area. What is the accident spot here? The student will have to now decide whether I need to take 15,000 rupees per month or whether I need to take 16,500 rupees per month. Will you take 15,000 or 16,500? Quickly decide and answer. Department A has rendered service to Department B. The employee is working in Department B for a salary of 15,000 but department A charges to department B 16,500, adding a 10% profit margin. What have I told you? I have told you internal profits are not to be considered. So therefore I will take 15,000 per month only for 2 months. Internal profits are excluded. You are right. Those who have given the answer, you are right. Machine was purchased for 52 lakh 78,000. Sales tax was charged at 4%. Sales tax was charged at 4% of the invoice. So plus 4% of 5 to 78,000. We don't know whether this sales tax is refundable or non-refundable. So you assume non-refundable and solve. 18,590 transportation charges were incurred to bring the machinery to the factory. Architect was engaged as a fees of 10,000 to supervise the installation. This is professional fees. Also, payment under the invoice was due in 3 months. However, the company made the payment in second months. This is a waste of time. This line which I am highlighting now is a waste of time because this is to confuse the student. When will the company make the payment is not relevant here for this question. So all of you kindly participate and tell me quickly what will be the total cost of this machine. I have written here the answer. Please do the calculation and tell me. Waiting for your answer. Final answer. Final answer. Anybody wants to answer? Please try. Come on, dear student, you can do it. You can do it. You can only do it. Okay. So check the answer. These are the questions for 4 marks which you have to handle in the exam. So the answer is purchase price, take the full amount, add sales tax, add sales tax 211,120, site preparation cost 47290, technician salary only for 2 months, and we will take 15,000 into 2 here, 30,000, initial delivery cost 18,590, professional fees for architect 10,000. Only tell me whether this total is right. 5595,000. There is a note for technician salary. There is a note for technician salary, and this note says internally booked profit would be eliminated in arriving at the cost of the fixed asset. In arriving at the cost of the fixed asset. One more note write down, note number 2. Dear student, one more note write down, note number 2. It is assumed sales tax is non-refundable. 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 Nikhil is right. Saurabh, Tanya, Ranjit, you are right. So this type of question please practice today. Do not sleep. Sleeping is a crime for an IP CC or intermediate student. Please come to next important discussion. Come to your theory part. Exchange of one asset for another asset. Exchange of one asset for another asset. So this I am going to explain now. Okay. This is suppose car and this is machine. Car acquired, machine given. Car acquired and machine given. Or for example, it can be car acquired, car given, exchange offer. When you go to purchase a car, normally they will say if you have an old car, you can bring it to us also. Or for example, you have given inventory and you have acquired a car. Or for example, you have given investment and you have acquired a car. You had some government security, you said you take my government security and you give me your car. Or what is or possible? You have issued shares of your company, issued shares of your company, and you have acquired a car. Or one more example, suppose you own a hotel, and you allow the other party to use the hotel for 1 month, and in return you received the car, you got the payment in the form of car. Oh, and it is also possible sometime that there may be exchange of some cash also. Like when you go to purchase a new car. Recently I purchased i10 car, okay? And I had some old i10 also. So new car purchased, old car given. So of course the buyer will not agree, the other party will not agree. So in addition to giving your old car, you have to give 2 lakh rupees cash also. From this party's angle, this party received car and cash. This party received car and paid cash. So now the student is asking how to do the accounting. How to do the accounting? So we have to refer the guidance given by this standard. The issue is how this asset which is acquired, let us say this is Mr. A, how this new asset or asset acquired by Mr. A will be recorded in the books of Mr. A. If you have understood the issue, you will understand the discussion. So following principles will apply. The cost of an asset acquired in exchange for another asset should be measured at fair value. So the standard says first preference should be given to fair value. However, these two conditions must also be satisfied. Then you will apply fair value. Many students don't understand this point. You can apply fair value only when, unless the exchange transaction lacks commercial substance. Unless the exchange transaction lacks commercial substance. Oh my God, before coming to the class today, you have not thought that so much complication will be there. Now, what do you mean by commercial substance? There must be some element of commerce. Element of commerce means there must be some gain or loss. There must be some gain or loss in the transaction. If there is no gain loss, no benefit, then it is not commercial substance. For example, I have an Activa 2022 model. My friend also has an Activa 2022 model. Same model, same mileage, same model, same mileage. Okay, everything same. What one day we decided? We decided that we will exchange our Activa. We will exchange, you take my Activa, I will take your Activa. Is it right? Does this transaction have any commercial substance? Tell me, does this transaction has any commercial substance? There is no commercial substance because there is no commerce involved, no gain loss involved, no change in future cash flow is involved. Then I can't apply fair value. I can't apply fair value. And second, when you can't apply fair value, when the asset received, when the fair value of neither the asset received nor the asset given up is reliably measurable. You can't, suppose I have taken one building acquired, and let us say machine given up. Fair value can't be measured. Fair value can't be measured. Neither we can get the fair value of this building, nor we can get the fair value of this machine. Sometimes if the asset is very old, it is difficult to ascertain the fair value. Then also I can't apply fair value. This is easy to understand. When you can't calculate the fair value of both the asset, acquired asset and given up asset also, so how will you apply fair value? Okay. So then your question will be, what should we do? What should we do? I will answer this query. If you lack commercial substance, or if you can't calculate the fair value, then how do I do the accounting? I am the accountant. I have to ensure first there is commercial substance and at least the fair value of one asset you can find out. Now suppose these conditions are fulfilled. Condition fulfilled means transaction has commercial substance and fair value can be identified. If fair value can be identified and transaction has commercial substance, then the answer is, if the entity is able to determine the fair value of either the asset received or the asset given up, then fair value of the asset given up is used. Underline, fair value of the asset given up is used to measure the cost of the asset received unless the fair value of the asset received is more clearly evident. Unless the fair value of the asset received is more clearly evident, this sentence can be simplified as follows. Fair value of asset given up or fair value of asset acquired, whichever is more clearly evident. whichever is more clearly evident. First priority will be given to asset given up. This is the sacrifice we are making. This is the consideration we are paying. But if the fair value of the asset acquired is more clearly evident, then I will take the fair value of the asset acquired. Okay. Next point. If the fair value of the asset given up or asset cannot be measured, now suppose we have this challenge. We can't calculate the fair value either of the asset given up or the asset acquired, then we will simply take the cost is measured at the carrying amount of the asset given up. Let us understand with the help of some numbers. Suppose I have acquired machine and given up building. Fair value of both are not available. But carrying amount of machine in my book is 1 lakh. Sorry, carrying amount of, not machine, carrying amount of building in our books of account is 1 lakh. Carrying amount means book value. Carrying amount means cost minus depreciation. That is available. So the standard says this carrying amount of building given up will be deemed cost of the machine acquired. Carrying amount of building given up is the deemed cost of machine acquired if fair value of both the asset cannot be ascertained. If fair value of both the asset cannot be ascertained. Okay. What do you mean by fair value? Fair value means the amount at which asset would be exchanged between knowledgeable willing parties in an arm's length transaction. So basically market value. Knowledgeable buyer, knowledgeable seller, willing parties enter into a transaction is called fair value, and commercial substance of a transaction should be determined by considering the extent to which future cash flows are expected to change as a result of the transaction. Very interesting line. When will transaction have commercial substance? Transaction will have commercial substance if future cash flows are going to be affected by the transaction. If I take Activa and give Activa of the same model, no difference, it means my future cash flow will not be affected. But if I give laptop and get a scooter, this will affect my future cash flow, and then I will say transaction has a commercial substance. In order to understand this point very clearly, let us look at this small table given to you. This is printed in your book. This is case 1, case 2, case 3, case 4. Case 1, all of you will concentrate on case 1. Here, fair value of the asset acquired is 12. Please write down more clearly evident. Fair value of the asset given is 10. Fair value of both are available. Carrying amount is 8. Now the institute is going to ask you a question. At what amount the asset acquired will be recorded? The asset acquired will be recorded at 12. The reason, it is more clearly evident. It is more clearly evident. This is case 1. Okay. Case 2. All of you concentrate on case 2. Fair value of the asset acquired is not clearly evident. Fair value of the asset acquired is not available only, but at least the fair value of the asset given up is available 10 lakh. So asset will be, the new asset acquired will be measured at 10 lakh. Case 3, concentrate on case 3. Fair value of the asset acquired is 12 and fair value of the asset given up is not available. So at least one of the two is available. I will record the new asset acquired at 12 lakh. Last case says, concentrate on case 4. Both are not available. Both are not available. If both are not available, then the carrying amount of the asset given up will become the deemed cost of the asset acquired. The carrying amount of the asset given up will become the deemed cost of the asset acquired. Have you understood? Any query? Have you understood? No? Understood? Any query? Now one student is asking a useless question. What is carrying amount? The whole Ramayana is over and you are asking who has kidnapped Sita. Is it right? The whole Mahabharata is over and you are asking what is Gita? Unbelievable. Okay. So please revise the chapter and come tomorrow sharp time, same time, no delay. Okay, and read and come so that you don't have to ask questions like what is carrying amount. Okay, ask some genuine question. So now we'll continue tomorrow. Thank you. Enjoy your day. Revise your chapter. Come tomorrow.